As the old saying goes, there's safety in numbers. And when it comes to index funds, the biggest funds are actually some of the best funds out there. Hi, if you're new to the channel, my name is Tay from Financial Tortoise, where we learn to grow our wealth slow and steady. In this video, we're going to talk about the 5 biggest index funds in the world. And just to give you a heads up, currently 2 companies dominate the index fund market, Vanguard and Fidelity. Therefore, the funds that we'll review today will be owned by at least one of these companies. Let's start with number 5 on our list. The 5th largest index fund in the world is Vanguard Total Bond Market Index Fund, also known as VBTLX. With assets under management of $286 billion, it is the most popular bond index fund in the market. The fund aims to track the Bloomberg US Aggregate Float Adjusted Index, a broad-based benchmark that measures the investment-grade US dollar-denominated fixed-rate taxable bond market. It represents approximately 10,000 different individual bonds. It has an expense ratio of 0.05%, which means that if you have $10,000 invested in VBTLX, you're essentially paying $5 for Vanguard to manage this fund for you. In addition, it has a minimum investment requirement of $3,000. The fund started in 2001, and since then, its average annual total return has been 3.51%. The Vanguard's VBTLX provides investors investment exposure to U.S. investment-grade bonds, including U.S. Treasuries and mortgage-backed securities. The fund's holdings are primarily U.S. government bonds, with 66.6% of funds weighing, while 3.8% are AAA rated bonds, and 3% are AA rated. And bonds are an essential part of any well-diversified portfolio, especially as you get closer to retirement age. At a high level, a good way to think about bonds in comparison to stocks is to consider them as investments that will smooth out your volatile stock investment ride. Stocks are a great wealth-building tools for the long run. However, in the short term, they can be quite volatile, moving up and down constantly at the whim of slightly threatening news. Bonds, on the other hand, might not have the big long-term returns, but it doesn't have all that volatility that comes with stocks. If you were to compare a total stock market trend, VTSAX, versus total bond market index, VBTLX, the past 20 years, VBTLX has smaller overall gains, but has much less volatility than VTSAX. What having bonds in your portfolio will do for you is that during times of market crash, where your stock investment can dip 20 to 30%, your bond investments will hold your portfolio steady, like a good anchor. And in my opinion, Vanguard Total Bond Market Index Fund, VBTLX, is the one and only bond fund you need in your portfolio to help smooth out your investment ride. The next 4th largest index fund in the world is Fidelity 500 Index Fund, also known as FXAIX. With asset under management of $369 billion, it is Fidelity's most popular index fund in the market. The fund aims to track the S&P 500 index, which broadly represents the performance of the 500 largest publicly traded companies in the United States. It represents 503 individual public companies. It has an expense ratio of 0.015%, which means if you have $10,000 invested in this fund, you're essentially paying $1.50 for Fidelity to manage this fund for you. And unlike most Vanguard funds, the Fidelity 500 Index Fund has no minimum investment requirement. The fund started in 1988, and since then, its average annual total returns have been 10.64%. The top 10 holdings make up 29.37% of the portfolio, including Apple, Microsoft, Amazon, Meta, and Alphabet. In 2018, Fidelity launched the Fidelity Zero Total Market Index Fund, FXAIX, with a 0% expense ratio to bolster its lineup of offerings. It's gained popularity recently, given that it costs literally nothing to invest in FXAIX. However, it still has ways to go, given that compared to Fidelity 500 Index Fund, which has $369 billion in assets under management, the FXAIX is still only $12.3 billion. If you're invested with Fidelity and want to hold this oldest and most reliable index fund as part of your portfolio, you can't go wrong with Fidelity 500 Index Fund. The 3rd largest index fund in the world is Vanguard Total International Stock Index Fund, also known as VTIAX. With assets under management of $369 billion, it is the most popular international index fund in the market. The fund aims to track the FTSE Global All Cap excluding the United States index. The index comprises large, mid, and small cap stocks globally excluding the US. The index is derived from the FTSE Global Equity Index series, which covers 90% of the world's investable market capitalization. It represents approximately 7,800 international companies. It has an expense ratio of 0.11%, which means if you have $10,000 invested in VTIAX, you essentially are paying $11 for Vanguard to manage this fund for you. In addition, it has a minimum investment requirement of $3,000. The fund started in 2010, and since then, its average annual total return has been 4.79%. The top 3 regions represented by this fund are Europe at 29.6%, Pacific region at 26.7%, and emerging markets at 25.2%. The biggest countries being Japan at 14.8%, United Kingdom at 10.4%, China at 8.1%, Canada at 7.9%, and France at 6.2%. The top 5 companies represented are Taiwan Semiconductor Manufacturing, Nestle, Tencent Holding, Samsung Electronics, and Roche Holding. The fund aims to represent the market outside the United States based on market capitalization, so it's not a surprise that a good percentage of the fund is made up of developed countries like Japan, Western European countries, and Canada. However, what is also nice about this fund is that a quarter of the fund is made up of emerging markets like China, India, and Brazil. Emerging markets can be a bit risky, but at times are known to provide much greater returns than developed regions. When we're only investing in US-based companies by holding only US-based stocks, we're potentially missing out on portfolio growth that these international companies can provide. US stocks provide great return on our investments, but US stocks still only represent about half the world's stocks. The total stock market value of the world is approximately $68 trillion, and the US companies represent $33 trillion of that, or about 49%. So if you're looking to hold one international fund in your portfolio that reflects a broad representation of companies outside of the United States, then Vanguard Total International Stock Index Fund is a solid option. The second largest index fund in the world is Vanguard 500 Index Fund, also known as VFIAX. With assets under management of $766 billion, it is the most popular large-cap index fund in the market. The Vanguard 500 Index Fund mirrors the S&P 500 Index, offering exposure to the 500 largest companies in the United States stock market across various industries. At the time of this video, this fund represents 505 public companies. It has an expense ratio of 0.04%, which means that if you have $10,000 invested in VFIAX, you're essentially paying $4 for Vanguard to manage this fund for you. In addition, it has a minimum investment requirement of $3,000. This fund is actually the oldest index in the market as the industry's first index fund for individual investors. The original version of it started in 1976, and since then, it's had few facelifts, with the latest being in 2000. Since then, its average annual total returns have been 7.36%. Given that it represents 500 largest publicly traded companies, the top holdings include Apple, Microsoft, Amazon, Alphabet, Tesla, Nvidia, and Berkshire Hathaway. What's great about this fund is that when most people talk about the stock market, they're most often referring to the Standard & Poor's 500, not the total stock market index. And the reason is that because it is so much older. It was created in 1926 when it began tracking 90 stocks, and in 1957, the list expanded to 500. And for the past century, it has been the go-to index to represent the stock market. When you turn on any financial news, reporters are always discussing how the S&P 500 is up 50 points or down 100 points. It essentially represents the 500 largest US corporations weighed by the value of their market capitalization. Because it is weighed by market cap, though there are approximately 4,000 publicly traded companies in the United States, these 500 stocks represent about 80 to 85% of the market value of all US stocks. And the weight within the index automatically adjusts based upon the changing stock prices. To this day, the S&P 500 remains the standard to which professional mutual fund managers and investment firms compare their returns against. So if you want your equities holding to match the performance of the largest US stocks, since they're essentially what moves the market, hold Vanguard 500 Index Fund. Or if you're invested with Fidelity, invest in Fidelity 500 Index Fund as your core equities holding. Alright, let's talk about the largest index fund in the world, my personal favorite and the king of all index funds, Vanguard Total Stock Market Index Fund, also most commonly known as VTSAX. With assets under management of $1.2 trillion, it is the most popular and biggest index fund in the market. And it is the only index fund that is in the trillion-dollar arena. The fund aims to track the CRSP US Total Market Index. CRSP stands for Center for Research and Security Prices and is part of the University of Chicago Booth School of Business. It probably is the most comprehensive total market index that includes around 4,000 companies across mega, large, small, and micro capitalization. And thus, at the time of this video, VTSAX represents approximately 4,100 publicly traded companies. It has an expense ratio of 0.04%, which means that if you have $10,000 invested with VTSAX, you're essentially paying $4 for Vanguard to manage this fund for you. In addition, it has a minimum investment requirement of $3,000. Though the original fund started in 1992, it's gone through some variations since, and as the latest facelift in 2000, the fund's average annual total returns has been 7.67%. If you want one fund to rule them all, this would be it. It not only represents big boy companies like Apple, Amazon, and Microsoft, it also represents thousands of lesser known ones as well. When you purchase VTSAX, you're essentially buying a piece of every one of these companies. And buying stocks via broad-based index funds is one of the best ways to tap into the growth of the greater American economy and thus grow your net worth. No one has a magic ball to predict the future, but if you were to just take a look at the past 10 years, VTSAX had an amazing return of 16.3% annually. Given the compounding of these returns, if you had put in $10,000 10 years ago into VTSAX, it would have grown to $45,000 today. Not bad for just buying and holding. Thank you guys for watching. If you'd like to learn more about how to incorporate all these funds into a simple 3-fund portfolio, check out my video here. Until next time, all the best.